foremost, what is it about this Bitcoin versus gold debate that has people so divided?
Performance. Clearly, if you're looking for hedge against inflation or against fiat currency risk, which is now being concerned or becoming a concern globally because of all the printing presses going on in Europe and the US, the thing to have held for the last 24 months has not been gold, it's been Bitcoin. And so that's why there's so much focus on it. There seems to be a tendency, and it's accelerating quarter by quarter, for institutions to start allocating to Bitcoin. And Bitcoin is sort of the gold of cryptocurrencies, and you could consider Ethereum the silver, I think, at this point. I own both, but I also own gold. And I own gold because for centuries, it's been a hedge for stability in portfolios and for inflation. And, you know, it's just recently in the last 5 years where people have begun to realize that maybe there's a different way to play this, and it's called cryptocurrencies. And I think some of the luster, that's a great adjective, on gold has come off because people have allocated more capital to cryptocurrencies, notably Bitcoin, than gold, particularly in the last 24 months.
Right. And I think that's, part of why Frank Giustra has agreed to do this, because he's seeing and hearing the rhetoric that's being put out by the Bitcoin crowd, and obviously taking a chunk here out of gold's market share, Kevin. So I guess, if you're Frank Giustra, right, what points would you be hammering Michael Saylor on?
The long-term continuity of gold as a hedge against inflation is undeniable. There's no question that other trends have come and gone, but gold has been a constant since the times of the Romans when they were mining it on the island of Cyprus. Those mines still exist. And so, at the end of the day, you have to hand it to gold for being a long-term glean of value. The other issue, if you're really concerned about hyperinflation and the ability to have an asset that is a solid asset. And the trouble with crypto, you can't really see it. You have to hold it in a wallet. It exists in the ether, the digital ether. Gold, you can actually physically hold a bar of gold. Now, that could be a pro or a con, depending on the way you think about it. But you think about the people that came out of Germany in the Second World War, the asset they held was gold. And that worked when they landed in New York. That was still of value to people. And gold was the currency that actually was the constant during these turbulent times. Now, will that be the case with crypto? It's too early to know. It's too nascent. It's too early. So I think Giustra will push on that. The problem is going to be the debate that's going on with institutions that we have to touch on around sustainability models and ethics models for both those asset classes.
Kevin, but what about the regulatory risks? If you were Frank Giustra, wouldn't you really be honing in on this as well?
Yeah, I think I would be. I would be talking a lot about the regulatory risks, not just domestically, but internationally. But the problem there, and what Saylor is going to push back pretty hard on, obviously, is that the regulators are loosening all around the world. The Canadian regulator has been very forthcoming, and now we have ETFs that hold Bitcoin. You've got the same situation going on in Switzerland, France, Germany, Australia, New Zealand, England. In fact, the whole Eurozone is opening up to the concept of cryptocurrencies, and the Chinese government themselves have issued their own cryptocurrency, an official government-regulated currency that Chinese people are starting to use within the country. Now, you wouldn't want to own that currency because it's on the blockchain and the Chinese can actually identify what you own and turn it off and stop you from trading it. So I think that's going to be a tainted currency for a long time. But what's happening and why Giustra is going to have a very hard uphill battle is the momentum against him is huge. It's mountainous now. There's just so much interest in crypto at the institutional level and so little interest in gold that I think it's a very tough debate for Frank to win. And I predict at best a draw, but I think Giustra, he's going to fall down on this one. I feel very sore. So, I'm going to send him some roses. He's going to be crying soon.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
Okay, but so you've mentioned, you're clear with that. You think Michael Saylor is going to come out the winner in this, and really the points he'll hammer home are price, the momentum, the fan base behind crypto?
Well, look at the momentum on just valuation. Just look at what's going on in the valuation and what's happening with gold. It's not increasing in its total aggregate valuation. It's been kind of stuck. Meanwhile, the momentum is all on the side of cryptocurrencies. I mean, there's many cryptocurrencies making huge moves. Now, yes, it's volatile, But gold too is volatile. It goes through 10-year stretches where it doesn't even do anything. Now, I own gold. I have a 5% weighting in gold. To be specific, 2.5% of it is in physical gold. I pay the storage. 2.5% is traded in ETFs that hold gold. And the reason I have that liquidity in the ETF is so I can rebalance to a 5% weighting each quarter. Buy up when it goes down, sell down when it exceeds a 5% weighting. And I use an ETF to do that. I could never do that with crypto until recently. And if I wish to, I could buy an ETF now and do the same thing. I could hold Virgin coins in a wallet, my own private wallet if I wish, and then trade around it. But then there's this new problem. And this is where I hope you steer that debate. And this is brand new. And I'm trusting you're going to do this. When you mine gold, you rape the earth. The amount of carbon that you create mining, digging, scratching, blowing stuff up, processing the gold, taking out, the other elements of it is just brutal in terms of a carbon footprint. It couldn't be worse. I can't think of anything that causes as much pollution as mining gold. And then you look at Bitcoin, where you've got a situation where this has been flagged by institutions that are watching Chinese burn coal to create electricity that then is converted into Bitcoin. But there's a whole new generation of miners emerging in the Nordic countries, in northern Canada, in Sweden, in Switzerland, in France, where they are using hydroelectricity, sometimes excess hydroelectricity, and flaring off nat gas, where it's being burned already, to create electricity. So they're doing it on a carbon neutral or reduced carbon footprint and creating an asset that doesn't have as much, sustainability issues that gold has. I don't think Frank can survive that discussion. There is no clean gold. There's just no green gold at all. It takes a tremendous amount of carbon to extract it from the ground. And I think that's going to start to be an issue for institutions as they allocate. Even though they have no regulatory concerns with gold, they're going to have sustainability concerns, just like 64% of the coin that's been mined in the world today is now being flagged by institutions that have sustainability and ethics committees saying they do not want to own Chinese blood coin. So you've got a lot of currents flying around. This should be a really great debate.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.